It's a sunny afternoon, you're relaxing on the sofa, listening to your favorite music with a refreshing lemonade. You ever scroll Instagram or Facebook and you see this? Build an ADU for $0 now. Don't pay until 2027. And for a second, you pause because you're thinking, wait, I can add a whole unit to my property and not pay anything right now? That sounds like a cheat code. But let me ask you something. If you don't pay now, when exactly do you pay and under what conditions? Because that part is where most people get into trouble. And I've seen this play out in real life, not on paper, not in ads, actual homeowners. So let's just talk through this like we're sitting at a table. These $0 now, pay later ADU programs, most of the time, they're not giving you anything for free. What they're doing is this. They help you build the ADU using short-term financing. Sometimes it's set up like hard money, sometimes private lending, or even a mix of both, and usually at a much higher interest rate. And then they tell you, don't worry about payments right now. We'll just refinance later, or you can open a HELOC, home equity line of credit. Sounds reasonable, right? But here's the part that matters. You're only being approved for the construction phase. Nobody is guaranteeing your exit plan. Now let's fast forward. It's 2027. The ADU is done. Looks great. Everything seems fine. Now the bill shows up. And the expectation is, okay, go refinance now. But now life happens. Let me walk you through real scenarios I've seen. Maybe interest rates are higher. Now your payment is not what you expected. Maybe your home doesn't appraise where you thought it would. Now the loan-to-value ratio, or LTV, which banks use to compare the loan amount with a property's appraised value, no longer what you expected. Maybe your income changed, you switched jobs, your business slowed down, or underwriting just got tighter. Now the lender says, sorry, you don't qualify. And that's the moment where everything shifts, because now you don't have an exit. And let me add another layer here, because I'm not just looking at this from a finance side. Construction is its own world. People think, okay, build ADU, done. No, you're dealing with permits that take longer than expected, city corrections, utility connections, contractor scheduling, material delays. Sometimes the project runs 3 months longer, sometimes 6, sometimes more. And during that time, that no payment structure, it doesn't mean no cost. In many cases, interest is still building behind the scenes. So by the time you reach that pay later moment, you might owe more than you thought you signed up for. Here's what I think is the most dangerous part. It's not even the loan itself, it's how it feels. Because when something has no payment, no upfront cost, no immediate pressure, your brain treats it like it's not a big deal. But you're making a decision today based on a version of your life 2 or 3 years from now. And let's be honest, you don't control interest rates, market conditions, lending guidelines, or even your own income stability. So what you're really doing is you're borrowing certainty from today and replacing it with uncertainty in the future. Now, let's say you get through it. You manage to refinance. Everything works. But now your monthly situation looks different. Mortgage is higher, property tax is higher, insurance is higher. You've got new debt layered in, and now your flexibility is gone. You can't breathe the same way financially. That's what we call being house poor. You added value on paper, but you lost optionality in real life. Now, I'm not saying ADUs are bad, not at all. Done right, they can be one of the best moves you make. You can rent it out for extra income or just use it for more space for your in-laws or kids. But the key difference is this. You plan the end before the beginning. Meaning, before you even start construction, you already know, I qualify for the refinance today. I understand my payment at realistic rates. I can carry this even if things don't go perfectly. That's a completely different decision. That's controlled. That's intentional. So next time you see $0 now, pay later ADU, just slow down for a second and ask, am I building something I can actually sustain, or am I stepping into a structure that only works if everything goes perfectly? If you're thinking about buying a home, refinancing, or using your equity, don't just look at the property. Make sure the financing structure actually works for your situation. Because in real estate, the difference between a good deal and a bad one usually comes down to the loan, not the house. If you want a second set of eyes on your numbers, or just want to understand what you can realistically afford before making a move, you can reach out anytime. Let's keep building. Hi, I'm Mico Chen, California realtor, mortgage loan originator, and licensed constructor. Like and subscribe to keep learning how the money actually works. Drop a comment below. What do you want me to explain next? Thanks for watching.